Welcome to the EarthSet podcast. Here we are in series 2. Actually, we're hosting a early morning session this time as one of our live events, but we're having it at HSBC Innovation Banking. We're at the Blue Earth Investment Forum, and we're hosting a breakfast with Zinc, a big climate tech VC in the UK. What we're doing is having a panel discussion on clean tech investments in the UK in 2025, looking at the data of how much was spent, how much was invested, in what sectors and what verticals and at what stage. We're then trying to do a bit of analysis, a bit of talk, and thinking about how this might mean we're going to reform in 2026 to give the investors and the audience a bit of a hook and a bit of a steer about what's happening and how the world is placed. We've had some great speakers. We've got Sarah Mackintosh from Cleantech for UK, Sammy Fry from Tech Nation, who all both brought with them stats and data shows the real story, not just anecdotes and bits and pieces of evidence. It's a really interesting talk. There's lots to think about and lots of great questions at the end from the audience. I hope you enjoy it. The reason we're here today is to talk about climate tech data. Everybody in this room, as Luke says, works in this place. We have a lot of rumour, we've had a lot of gossip. I think there's been a lot of anecdotes about how things have been over the last year. But now it's 2026, we can actually see the full stats from last year and look at the actual data. And we've chosen this time now because Sarah, who works for Cleantech for UK, puts an annual report out, and she's about to produce that report. So we thought we'd sneak in early and get some of her stats before she produces them. So just to recap, Sarah is the director of Cleantech for UK. They're a policy and advocacy group, and they have a coalition of clean tech investors and basically do a lot of work trying to promote the clean tech sector in the UK. Sammy Fry has also produced a report which came out in December on the state of clean tech in the UK, and has also been helping the Net Zero Insights report come out, which I think you might have seen too. Sammy is the head of climate Tech Nation, which does an awful lot to support early stage ventures and puts through cohorts into to make them spring out and be the unicorns of the future. So they've both got a lot of insights, a lot of data to share. So really, let's dig in. We're going to have a few stats from each of them, then we're going to try and do a bit of discussion about why some of these stats have happened or what they think they mean for the future, because let's face it, the future is always more important than the past. And then I'd really like some stats from you, your thoughts as well, from you, and some questions, and we'll see where we go from there. So first off, we've got Sarah. I've got your stats here.
Hi everyone. So I thought I'd start just by looking at some data from clean tech investment in the broadest sense. So here is a graph that talks about equity, debt, project finance, year on year. And I think it's probably quite hard to see the numbers, but total equity funding was about 3.9 billion last year, and you can see that there's been quite an increase over time in project finance and debt. So I think what that's telling us is, A, we're getting a lot more clean tech to the level where it can access debt, and also the debt market is beginning to understand these companies and projects much better than they did in the sort of early 2020s. So I think the headline of where we are sort of in 2025 wasn't too bad. I think actually we recovered from 2024, which of course was an election year, so it's not really a surprise that 2024 was a little bit down on the previous years. But I think whilst the headline is good, what I'm trying to show with these graphs here is actually it's fine. In previous years we've seen quite good investment at early stages, but we have this sort of valley of death around Series A and Series B. So really when companies are trying to commercialise, they suddenly find it really difficult to access finance. And I guess that's because they're quite capital intensive. Perhaps some of the policy support and demand side hasn't been in place. So that has been historically a very well-known issue for a long time. But I think what's really interesting, and what we saw last year in particular, is even at the early stage, so even at the seed and Series A stage, we're seeing a real drop in the numbers of deals and the amount. And I think there's a couple of reasons for that. First of all, I think on a sort of some early stage funds have found it more difficult to raise their funds, and it's taken them longer. And I think also there is a problem where investors are having to hold on to companies perhaps more for longer than they would have previously because of this sort of valley of death issue. So investors are changing the way they're investing and perhaps investing in lower numbers but keeping them for longer. So I think that's quite interesting sort of to see that drop off in 2025. Just briefly, international comparison. So on the left of the graph is looking slightly apples and pears, I know, but looking at China, EU, USA, and the UK. And I think what you can see here is the UK is actually fairly consistent. The US had a massive drop-off in 2023, but surprisingly, or I was surprised anyway, 2024 and 2025, certainly from an equity perspective, was quite stable. And I was surprised to see that because of the rhetoric of Trump, of course. But it's interesting that people are still finding ways and things to invest in. And then on the other side, the graph looks at countries with a similar population size to us, so France, Canada, and Germany. And I think, again, what we're seeing here is the UK is actually surprisingly does really well compared to its size and is fairly consistent, so it's showing the market stability. So just briefly, some sector insights. I don't think it's a huge surprise that energy and power is the most successful, gets the most investment. I think for a couple of reasons, of course, they're really big CapEx, tend to be really big CapEx projects anyway, but also I think the UK policy around energy and power is the most advanced. So we've got the demand side with the contracts for difference and other incentives. And then, of course, the policy support, so the mandates around Clean Power 2030. And then I just had a very quick look at what it looks like in the US. Yesterday, I just did this. So I think what surprised me actually is energy and power still getting an awful lot of investment despite the complete rollback of the IRA. And I think that's probably driven by batteries, by nuclear. So again, there's sort of some sectors that are definitely still getting investment despite all of the rhetoric. And I will stop there.
That's a good overview. There's lots of questions I want to kind of come back to on that. But I think we're just trying to try and synthesize this a bit with Sammy and some of your slides, and then we'll try and discuss them all together, that's okay. So, Sammy, you put out your technician report, which we will add, by the way, both of these reports to follow up for both people, and then we'll also put them in the show notes for the podcast. But you brought this out in the end of last year, so this is also pretty kind of live data, yeah?
Yeah, hopefully. Yeah, maybe not quite as updated as Sarah's, but hopefully still updated enough. Yeah, I feel like I'm slightly more pessimistic than Sarah. I think perhaps because of our numbers as well. But I think I always like to remind everyone of like the positive story behind the growth in climate tech. So since 2010 in the UK, there are about 200 climate tech startups. Today in the UK, there's over 10,000. And globally, it went from about 10,000 startups in the world to around 120,000 climate tech startups today. So I think that growth story in general is incredible. And over the last 10 years, the market valuation of climate tech in the UK has gone from $5.7 billion to around $75.5 billion today, which again is pretty phenomenal. So there has been that exponential growth in climate and nature tech. However, in the last 5 years, in the last 2 years is where climate tech has struggled. So from 2020 to 2023, we saw this kind of exponential growth. And in the last 2 years, we have seen 2 years of down rounds, essentially. And according to our data, at least, we are back to the same levels as 2020, which is a slight, not a slight concern, it's a big concern for the industry. And I think there's a few different reasons for this. I think between 2020 and 2023, the signals and the momentum from policy was there, which signaled to investors that there would be corporate demand for climate tech because of all these net zero commitments and supportive policies, which led to an influx of investment into the space. We've seen that the adoption rates have not been quite what we expected them to be. So naturally, investment has declined. Investors have become much more risk averse. And at the same time, in the last years, we've seen this exponential growth in AI. And now $1 in every $4 is invested into AI. So a part of our research, I'm not sure what order this is in, has looked at the discrepancy. Here it is. So this is the discrepancy in AI versus climate tech. Of course, there is a middle ground here as well, because within climate tech, a lot of the solutions are AI enabled, and there is incredible work being done across various industries on how AI is supporting emissions reduction, nature restoration, and waste reduction. However, more broadly, I think when you look into the growth of AI and the degrowth in climate tech, I think it is a concern, and it's quite expected in some ways, because from an investor's perspective, of course, they are looking for returns within, say, 5 years' time. Within SaaS, that's fairly doable. If you're looking at hardware or life science, of course, that's going to take longer. And we have had a level of patient capital which has been quite supportive from the government at an early stage, but I think at a growth stage, there's still a lot more we should be doing. And one of my frustrations is the kind of current overvaluation of a number of startups. So for example, in our data, it wasn't quite up until the end of December, but I think looking at funding levels were about 5.5 billion pounds into the UK. And there's quite a number of startups in voiceover software and different generative AI players which have raised 200 million pounds, which is it's quite a substantial percent of the overall funding going into climate tech. So I think my gripe is that funding, especially at that level, should be going to far more impactful areas, which we can definitely unpack as well. I'll just go through these other graphs. So this is, as mentioned, this is UK VC investment into climate tech. I think this is in comparison with, this is the software versus hardware graph as well. So this just shows the decline in investment into hardware startups. So you can see here there was increased investment up until 2023, and since then we've seen a 73% decline into hardware startups. Again, which is reflective of what I was saying, where investment is increasingly going to SaaS, and it's not going into the areas where we can fundamentally disrupt key industries. So I think, again, that is a challenge. Whether we're looking at energy infrastructure, food and agriculture, decarbonising the built environment, all of these are very physical problems. So I think that decline is worrying for the sector. And this is just the kind of the macro level. So this is our findings of how we're back to the levels we were in 2020, although there is some slight difference in Sarah's findings, so we can unpack that as well. But I'll stop there.
Okay, brilliant. Thank you both very much. As I said, we will put all these stats available, make them available to everybody. I mean, I don't know. I find, as looking as not somebody who's not an investor, there's a number of things that strike me. One of which is so 2005 wasn't quite as bad as everybody's banging on about. I mean, when you talk to lots of people, 2025 was a disaster, but actually the overall levels are actually better than 2024. So there's that. But it does seem to mirror the fact that when a lot of people were talking, they were talking about early stage investing, and clearly there have been far fewer early stage things funded. Why is that pipeline narrowing, do we think? Because what is it? I mean, a lot of people who work who are here are early stage, they're kind of seed, pre-seed, Series A investors. Why is that? Why are we getting less deals at that stage, do we think?
Well, I think for a couple of reasons. I mean, as I mentioned, I think there are a number of funds that have taken longer to raise their fund than they perhaps anticipated. I think also, from a policy perspective, we saw the Net Zero Innovation Programme come to an end last year, and nothing replacing it. So again, it's a general drop in government incentives to sort of help companies along. So I think, and as I mentioned, I think companies or investors are holding on to their investments longer than they previously did.
And is this something that you're seeing, you agree with, Sammy, and do you see this with your cohorts who are trying to kind of obviously find their first capital?
I feel like it's still a huge challenge. I mean, we prioritise hardware and life science in our programmes, and I think naturally because these startups are capital intensive, they face more challenges than most, but I think the environment is really tough. And we've seen a lot of VCs pivot to investing more into SaaS than into hardware, which has been a bit of a frustration. One of the things we are doing now is increasing our network of family offices and high net worth individuals to hopefully bridge that gap. But I do agree, when you look at the grant funding environment, when you look at NZIP, there's not as much grant funding as there was in the past, and I think that is a challenge. For me, I feel like UKRI, Innovate UK, has been hugely supportive to the early stage ecosystem. Like 70% of our alumni has been funded by Innovate UK, which is a pretty phenomenal stat, and I don't think you'd probably get a better stat across Europe or anywhere else. So that in itself I see as a success story, but the challenge is one, the thesis of Innovate UK in general. You know, who are they looking to support? They have different challenge areas, but I think there could be a more scientific approach to making sure that funding is going to those areas which require that extra capital, where investors can look at those deals and think, okay, this has de-risked my investment enough so I can invest in it. And I guess we'll come on to the growth stage aspect of things as well, but I think that is another area where there's this gap at the value of the Series A, Series B mark, which we call the value of death. In government funding. You know, when you look at the British Business Bank, they fund up to £10 million. You have the UK Infrastructure Bank, they fund typically from £25 million. So there is this £15 million gap in the middle where I feel like so many startups struggle. You know, if you're a capital intensive startup and you've raised Series A, you're looking to build out a lab or scale your commercial facility, investors see that as a risk because that's a lot of capex. So there is a role there from the government and obviously from other different bodies as well to look at how do we de-risk that for investors, because naturally at the end of the day they have to make a return.
Yeah, absolutely. I also kind of feel like some of the things you were talking about is like fundamentally it looks like we're pivoting from a climate tech kind of story to an energy transition story. That this is a lot more now about energy, that people are thinking about like the biggest sector growth. I mean, that is taking all the money, but also, you know, this is what's all in the story. It's about the growth of AI, the data centers, but also the fact that we're going to need the grid, it's grid transmission, wires, batteries. I mean, is that where, when it comes to, is that where we're going to? I mean, and is that where you would encourage your startups to move to?
I think government policy is really clear on this. So as I said, I think it's most developed in the energy sector, but also we now have an industrial strategy, which we didn't before. I think it's the most comprehensive industrial strategy we've had for years. I still think it's a little bit broad and trying to do too much, personally, but nonetheless, I think if you don't fit into one of the sectors in the industrial strategy, it's going to be a really tough time for you. Certainly to access public funding, it's going to be a really tough.
And what about you? Because I know you, when we talked the other day, you were talking about some of the other sectors that are coming up that are not in this sector. How are you encouraging them? How do you feel about them? I think you were talking very much about health and nature. Maybe you can tell us a little about some of those trends that are coming up.
Yeah, of course. I mean, I am shamefully biased towards that sphere. But there are very clear trends. So I do agree. I think when you look at first of a kind projects right now, like projects are very favourable to the energy transition, and there's not as much support for other industries. I think when I was talking about the human health aspect of things, I think there is growing movement, I think across the board from the general public even into caring about individual health, and obviously health comes back to everyone. And at the same time, there's noises from even the farming industry last week said that within the next 10 years, 60% of farmers are expecting a food crisis and a potential kind of epidemic leading to food shortage. So I think there are these edge areas where we are going to be facing crisis in a number of areas, but I think food is pretty key, even in the UK, to look at. And at the same time, there's incredible startups that are coming out of this area, and first of a kind startups as well. So for example, last year we supported a company called Wild Bioscience. This is a company focused on precision breeding, so looking at how do we really scale agriculture to a point where we can provide the world with nutritious food, which goes beyond regenerative agriculture, which we are focused on a lot here in the UK. And they just raised £40 million by the Larry Ellison Institute of Technology, which is incredible to scale that. And there's numerous startups across eDNA, soil health measurement, where you can essentially immediately measure the health of the soil to understand how healthy it is. So for UK farmers, this means they know they're growing produce, which will help healthy for you as a consumer. And I think that is interesting because at the moment there is this huge debate on supporting farmers to transition to regenerative. And with eDNA, with soil health measurement devices, with bioacoustics, if this is in farmers' hands, so I know this feels very niche at this point, but if this is in farmers' hands, it quickens the ability for them to secure green loans, to secure government subsidies, to transition, and as a financial incentive. So I think when you look at the potential for return on investors, and if you can forecast in 5 years' time, how much of a focus area would an industry be, such as food and ag? I would say that's an area where clearly there's going to be increased attention because of the challenges in the food shortages, because of the increase in innovation, and because there's increasing pressure on FMCGs, on ultra-processed food. So I feel like everything is coming together to a point, at least within that vertical, where we can say it's looking like a thing.
I think the thing is, I suppose, then we have this issue, which is if actually the early stage funding is narrowing and it's following the industrial strategy and it's looking after power and it's very AI influence, the innovation might be coming that way, but will they get the funding? I mean, I think this is obviously something where, people like you have got a lot of work to do in kind of making that case potentially, and the funders in this room. But can we go and answer this growth stage? Because that was the other thing that's quite interesting in your stats. That actually, that Series A stage onwards wasn't actually, the decline wasn't, there was less of a decline there, and actually there was some people hanging on to their investments longer. This area was not so squeezed at the very early stage. Is that quite interesting? I think that's quite interesting in terms of why is that happening? Why is that trend happening?
Well, I think perhaps it really depends if you're hardware or software. So people, we've just seen some really big deals in investments into Kraken, for example. They get money, but actually if you're building a first of a kind or a hardware base, it's still really, really tough. And I think, government has worked this out and has put some policy in place. So there's like the British Business Bank got a £4 billion fund in the spending review in June last year, but that's going to take quite a bit of time to trickle down. And again, that's very much to be seen as to how much of an impact it has. So I think there's definitely a difference between the software and the hardware. I think it's still really tough for hardware developers, but I also think people see the benefits of those hardware as long as but you've got to have your commercial case and your offtake agreements in place. It's not like it was sort of a few years ago where perhaps people would understand a bit of a green premium. We're not in that space anymore. How
about you, Mum? How much of your cohorts are finding that later stage funding? We're talking about this kind of this growth stage. And potentially, are we getting more capital discipline? What do you feel like it's happening out there?
Yeah, on the programme we focus mainly on earlier stages, so seed and Series A, but we are supporting a few of our alumni on much later stage rounds. I'd say within the growth stage, what I've found incredibly impressive from a few of our startups is how much funding they have managed to extract from Innovate UK. For example, I think there's one startup we've supported called Catigen. They've raised about £25 million or so purely through grants over the last 5 years. So not a single large grant, this is multiple grants that's really helped them to scale, and now they're at a point where they are raising their first round of investment while having such a great foundational base, which is amazing. And I think as an investor, that's an area I'd look into, and they are looking to revolutionise green hydrogen. They've got a few offtake agreements with a few brilliant corporates as well. So I think those companies who have managed to leverage grant funding intelligently, I think they'll be the ones who are going to be kind of the most successful in securing growth stage finance, because it is still a very challenging environment. It's not easy to raise a Series B round or a Series C round, especially if you're already diluted. So yeah, I think the two companies that come to mind are Catigen and then another company called Artemis, who have done a very similar job in raising, I think, around £50 million at scale. They're scaling electric maritime kind of ferries, essentially. And they've done an incredible job. And they're also just starting to raise, and they have offtake agreements secured. There's a level of political certainty as well, which is brilliant for them, because it means that they don't have kind of regulatory hurdles to go through. So they are also quite favourable from an investor's perspective.
I think I've got three more questions, and then we're going to go to the audience. I was reading your report, Cleantech 2024 report, and you were talking in that report how, we had all these new things by the government that's been announced. We had the National Wealth Fund, we had Great British Energy, we had the potential planning reforms. They'd all just been announced in 2024, so 2025 was going to be the first year where we might see the effects of this. Have these benefits that you, or potential changes at least, that you were looking forward to in your report made a difference in 2025, and will they?
So I think, some of the changes, have had to go through Parliament, so some of the planning stuff, etc., and be consulted on. So I think I'm still looking forward to. I wouldn't say they've made a massive difference yet. Although the National Wealth Fund have started to do a couple of interesting deals. So I think that has potential. I mentioned the fund from the British Business Bank that could be interesting. But yeah, I think we need to wait another year or two to really start to see those impacts coming through.
Okay. And just on that same thing, before we go on to 2026, what policy frameworks are you seeing that work or that we need to improve for in the clean tech in the UK scenario? Sammy?
Yeah, I feel like Sarah probably knows more on the policy front than I do, but I think I think the Warm Homes Plan is one recent policy that is quite supportive to the world of retrofit. I think there's more that it can do, but I think that is, once that is hopefully built out in a bit more detail, I think that will be hugely supportive to companies who are focused on revolutionising kind of UK domestic homes. So I think we need more of those examples across kind of every other industry as well, because at the moment I feel like where policy is supportive is on the energy transition. Hopefully it does start to on retrofit, but I would say policy frameworks across every other key sector still need a huge amount of work. I don't think I'd love to see more engagement from DEFRA, from DESNZ, from the Food Standards Agency directly with founders. I think one of our real, this is what I work with Sarah on the Climate Tech Policy Coalition. Like, what we really want to have is a direct engagement between founders and policymakers on the ground to kind of co-create policy frameworks together, as opposed to government assuming what founders need and creating it. There has to be a two-way dialogue, and that's happening on a very low level, but it's not happening on a large level. So I feel like the government are creating policies while engaging with very few founders on the ground.
Okay. Let's go on to 2026. Obviously, crystal balls at the ready. Are we going to see more 2025? Are we going to see any step changes? Is there anything coming up that we should be aware of?
Shall I start? So I think, I am excited to see how some of these policies start to impact, with the extra money. But I think fundamentally, the biggest thing that the government could do is sort out energy prices. And that's the one thing that they didn't do last year. I mean, they did their energy market reform, and instead of doing something quite radical, they chose not to. And I think, they can put in as many supportive policies as they like. They can deliver the policies really well, but until we get that fundamental issue sorted, I think it's always going to be a struggle for hardware companies to build and scale here.
Sammy?
Yeah, I'm trying to be as optimistic as I can. I think the role of philanthropy will be very interesting this year. I think there's a lot of philanthropic funds that I'm aware of that are starting to think about investing into private markets. So instead of just NGOs and government-funded initiatives, and I think that could unlock a huge amount of capital to support the transition, and hopefully also support investors in de-risking their investments beyond public funding. So that's one hope. I don't know if it's an expectation, but we can say it's a hope. And alongside that, I think family offices as well are starting to look much more seriously into climate and nature from our perspective. I think there's, I don't know if it's possibly because there's a kind of generational handover at the moment where the kind of the younger members of family offices are much more passionate about social impacts, the climate crisis, but that is a positive sign we're seeing as well.
So, I mean, the last thing, just because before we get to the question, everybody here is an investor. What would you be saying to them? I mean, well, you will say to them, well, what if they were saying to you, what's the big takeaway that you would say to look at or to advise them to do with their funds this year? What would you be talking about? Hard one, I know.
Well, I think being prepared to hold on to companies for a bit longer, and then fundamentally realising the shift from public funding, having previously supported pretty much every sector, that's not going to be the case moving forward. It's going to be industrial strategy, really, primarily.
Okay, Sammy?
Yeah, I would say don't follow the hype too much. Look for the edge cases. Look at the areas where there will be demand or potentially even a crisis in the next 10 years. And I think that's where a huge amount of opportunity lies. I think, AI-enabled solutions are imperative and they're hugely important. And I think almost every company should be utilizing AI to some extent. But I think historically, the vast majority of the largest companies in the world are all hardware or life science. So I think just still keeping faith that there will be returns in that space and looking for the edges.
Okay. Well, listen, thank you, both of you. That was really interesting. Lots of interesting food for thought. So who has got a question?
Kind of food and agriculture, it accounts for about 25% of emissions, let alone the fact that it's a human health crisis as well. I think this is my opinion is based on recent research into the state of food and agriculture across the world and in the UK, and it is very likely we will see a food shortage, as I said, in the next 10 years, possibly even in the UK. So with that, you'd expect there to be a response. And right now, no, it's not an industrial strategy. But if that was the case, and especially right now where everyone wants security, national security is becoming more and more imperative, that links to everything in our economy, and food is absolutely fundamental to that. So, my opinion is that it will become increasingly important. And at the same time, right now, there is already demand being seen on a number of innovations in the space where FMCGs are adopting a variety of technologies right now to measure the health of their farms, to measure the health of their products, and there is also increasing pressure because now there's direct evidence on not only the health effects on us as consumers from what we're eating, but also through technology we can actually directly understand the health of the soil, of the crops we're producing. So I feel like it's a natural place to look. But yes, to your point, investment is terrible into food right now. So, but I think again, it's one of those focus areas which you as an investor, if you were to lead in that field, I think you'll do incredibly well.
And just to add, I think historically we've seen, from a policy perspective, actually governments, progressive governments, just stripping back DEFRA, so anybody that's responsible for food, farmers. I mean, I don't think government has a good history of looking after them, quite frankly, and we've seen this in the latest farmers' fight. But actually, I think government fundamentally cares about what the people are shouting about the most, and I think people are really waking up to the importance of their food security and their health. So I think actually that might start to push government to care about this a bit more.
How about you? Is our asset structures fit for purpose for climate?
Well, no, it's not. And I sympathise with investors because, you have to have, ideally, I understand that the kind of the demand on having a short-term payback period. So, no, it's not. I think it does need a restructuring. I think investors need a lot more support when it comes to investing into hardware and life science to be safeguarded and to see a level of return within a short time frame to allow for the larger returns to come later. I think that is important. So I think the role of blended finance is essential, but I don't have the answer in terms of what that framework should look like right now. It's not easy. I know there were talks a while ago of the government insuring investors on certain technologies, which I think would be incredible. But again, Sarah's done much more work on this, so she's been having those conversations and nothing's happened. It's a bit demoralising. Another fundamental challenge we have is that investment teams are so incredibly small, and obviously climate spans across every single key industry. So there's definitely a lack of understanding often within VC teams, even kind of climate VCs, where if they're being approached by, say, a energy storage startup, and then next week they're being approached by a green hydrogen startup, and then suddenly there's a kind of precision fermentation startup that's knocking on their desk, the level of understanding has to be so wide. So I think what we do need to see more of, and I think this is partly on Jim's point, are more specialist funds where teams are specialised for a key sector. And there's a few amazing VCs at quite an early stage in the UK. You have Deep Science Ventures, there's Zero Carbon Capital, there's a number of others. But I think the challenge is that level of understanding and expertise in certain areas, especially when it comes to infrastructure and life science. We track kind of the failure rate of startups. There's been a number of kind of quite famous startup failures across various industries within hardware. We've had a number of electric lorry companies, for example, fail quite recently. There's been quite a number of kind of energy storage startups that have raised an enormous amount of capital and fail, but we don't have the rates on kind of VC returns from 2020 to 2021. That should be maybe our next report. Yeah.
Will everybody tell you though? That's the other question.
That's the thing, isn't it?
It's not always easy to find that information out. I mean, that was always the thesis, isn't it, about lots of climate funds, is that we get the brightest and the best talent, because people really believe in this stuff, and so we get the best. That was always a thing that when you read the decks, that's why we're one of our USPs. Is that what you see?
Yes, I think it's interesting because I don't have exact data, but what I do see is universities now are getting better at understanding how to spin out companies. Imperial is now running a master's in entrepreneurship, which is in its second year. So I think universities are starting to understand the importance of this area, and they've got better knowledge transfer offices. They're taking lessons from the US. They're creating programs specifically for trying to get people to become entrepreneurs. So I think the university system is really improving in that respect.
But particularly in terms of climate versus other things, I mean, do you get a better cohort than your fellow people at TechNation? Do you go, look at my lot, they're much better than yours?
Obviously, all the time. I think the other area which is pretty incredible is immigration. Like, we have so many incredible immigrant climate tech founders. At TechNation, we run the Global Talent Visa with the Home Office, so we support lots of exceptional talent coming into the UK. And when we track what they go on to do, a number of them go on to found startups, and the majority of those founders end up becoming either climate tech founders or founders within the health tech space, which is incredible. I think when I look at the makeup of our cohorts, the level of diversity is quite phenomenal. So I think that's kind of an incredible success story. We're really at a time, obviously, where the world seems so divisive on that topic. And then, like Sarah says, universities are doing a much better job. Our old CEO, he went on to found Founders at the University of Cambridge, which is doing exactly what you mentioned, where he's supporting PhD students spin out their projects into startups. There's been some incredible innovations off the back of that. But I do feel like when you look at the ecosystem now compared to 2 years ago, I feel like we're almost back to where we were 5 years ago. You have, obviously, Carbon 13 is doing an amazing job. You have Zinc, you have TechNation. But I feel like 2 years ago, there was this kind of proliferation of all these different accelerator programs. and quite a few venture builders that have ended up not really materialising. So I feel like, I don't know, maybe it's a question of the UK, of us kind of maturing in that space, and hopefully, the programs that were really delivering impact are still existing today. But I do feel like we still have a great talent pool in the UK. But I don't have the numbers in terms of how much talent as a percent is working in climate tech versus other industries. That again is another great question and kind of research piece for us to do. I feel like it's about bringing everything back down to the individual. Like talking to people in layman's terms about how it's going to affect your life as an individual. So not talking about climate change as an abstract theory, but talking about it in a way which you can relate to. I think that's why I talk about health. I think that's so attractive because everyone can relate to that. And within climate, we can relate to air quality as another example. All of us want to be breathing clean air. So I think as much as we can make the argument go right down to the individual and have very good proof points as to why you should care as an individual, I think that is how we get through, because I think our industry is buried in so many acronyms. I'd love to ask the general public, if they truly know what net zero means. I don't know what the level of understanding would be. So I think it is just about bringing it down to a level where everyone understands what we're talking about and how to relate it to them.
I think people need to start feeling the benefits of some of these technologies, and I think it comes back to my point on, I know I've been banging on about energy prices a lot, but to get people on side, they need to feel the impact in their wallet, they need to feel the impact maybe in their job, they need to see the benefits, and I don't think we're very good at showing that yet, and that's partly a policy problem, and perhaps partly because we're not shouting loud enough about what we're doing. And I think actually, the work I do is philanthropically funded, and one of the philanthropic funders is also very conscious of this. So I think getting those sorts of people on side to start to do some of these good news stories. I mean, we personally take MPs to try and go to see projects and learn about them. So I think there's a lot all of us can do to perhaps, shout a bit louder about this stuff.
Thank you very much. And just on that note, I will self-promotion here. We are actually, I think some of the issues on this are actually some of the negativity that we're hearing about climate stories and some of the pushback we're getting. And funnily enough, next Tuesday evening, the Earthset is going to be on Greenlash. And we're talking about how we deal with the growing pushback to climate change and what we should do about it. We've got some very interesting data from Project Tempo, who monitor public opinion throughout Europe on climate change. And we've got the head of the Conservative Environment Network talking about how he's dealing within his own party and his own people about the growing hostility to net zero and others. So please come along for that. But we must wrap up. We're way over. I'm sorry we did start late too, but you've been brilliant, and thank you for listening to us. Sarah, Sammy, a pleasure, very interesting. Thank you for your data, your stats and your insights. That was great. Thank you so much for sharing this episode with us. Hope you enjoyed it. Just to say, the two presentations that we discussed that Sammy's done for Tech Nation and that Sarah's currently putting together for Cleantech for UK will be in the show notes, so you can look at those presentations in full.
And if you did enjoy the podcast, please do give it 5 stars, subscribe, and maybe share it with a friend that might be interested.
It really helps people find us. Thank you.